Okay. Your unit owner's policy. So your unit owner's policy is to cover the items that corporation is not responsible for. So with the analogy of us giving the analogy of you flipping the unit over upside down and your things falling out, and that's what you're to insure. That would include your personal property, so that's your contents. If the bylaws state that you as a unit owner are responsible for improvements and betterments, that would also be something that you would be responsible to insure. And also the condominium deductible assessment. So in 2020, legislation was enacted that the deductible can be, up to the deductible can be charged back to you as a unit owner if the damage originates within the unit. Anything that's common property would be corporation's responsibility, so pipes within the walls, anything on the exterior, and sometimes there's some gray areas on, okay, well, whose responsibility is it if, say, it's a radiator or you've got baseboard heating and that is considered, could be considered common property. You'd have to refer to bylaws, and sometimes it's just not a black and white area. Sometimes it falls within the gray. When you're looking at your unit owner's policy, and personal lines insurers, they issue more, it's like a package type policy. So because of volume, because of how many and how many insurance policies they have, and high policy volume, what they do is have a unit owner's package. And same with if you are a homeowner, it's like a homeowner's package. And some of these come with standard limits. So when we're showing here improvements and betterments, if the board is responsible for the betterments and improvements, but your policy includes betterments and improvements, it's usually put on there as a standard percentage of like your personal property. It's something that they include that you generally don't pay for unless you're increasing those amounts because you have to. Also, additional living expenses. A little bit about additional living expenses. So additional living expenses are going to be those expenses that you're going to have out of pocket in the event of a loss that you have to go and live and reside elsewhere while repairs are being done. So it's important to look at your limit and see what they are. Personal liability. This is if somebody enters into your unit, they're an invitee, they say you have a carpet, they trip and fall and hurt themselves, and then they sue you for bodily injury. That's something that you must have. There's also some extra coverages that are on unit owners' policies. Unit additional protection. This is something that is like extra frills type policy. You'll need to check with your broker or direct writer what that includes, but it's generally a contingent coverage over and above. So say there was a loss and you are responsible for betterments and improvements, or pardon me, the corporation is responsible for betterments and improvements, and there wasn't enough limit there. There would be extra coverage to bridge the gap between if the corporation's insurance was inadequate to cover those betterments and improvements that you have implemented in your unit. And then there's common element loss assessment. So this can be a confusing title on what it covers because it says loss assessment, and that's not, they're not referring to a cash call. It's a unique insurance that is available to unit owners because you do share the responsibility with others for common property. And so sometimes it can be called common elements loss assessment. Sometimes it could show as unit owners special assessment. And what that is if there was say there is a high deductible for a sewer backup in your building, and the sewer backup deductible is $100,000, and the board could assess back that deductible of that $100,000. It has to be to a common element though, back to unit owners, and this coverage under your unit owners policy would actually cover that deductible. So it's actually insurance for a deductible. It's not deductible assessment, but it's to cover common losses that would occur to common property. The thing is that this coverage, the peril of what occurred would have to be covered under your policy. So for example, if there was hail damage and the hail damage deductible is $500,000, you have to have the hail coverage under your policy. So you really have to look at each policy. Each unit owner's policy is going to be different. So you really need to take a look and see what's covered under your perils of insurance and talk to your broker.